China's President Xi Jinping announcing in a New Year address on Saturday that the country's GDP grew by 120 trillion yuan, suggesting about 4.4% growth for the economy. Research from China Beige Book suggests that the real GDP growth might be closer to 2%, less than half. Let's bring in Leland Miller to talk about that, China Beige Book CEO, for more on this. Leland, good to see you. Happy New Year to you, sir. What is the status of the Chinese economy overall, and what does it tell you that President Xi, after 2 years of strict COVID-0 lockdowns, essentially threw it all out?
Well, the 22 economy is a disaster, for the year. And so I think that is why President Xi was under great pressure to toss out COVID-0, deal with some pretty rapid COVID spread, and then hopefully come out on the other side early next year with a recovering economy. But it's hard to explain just how bad the 2022 was. We remember back in the second quarter, it was the economy was in contraction with all those lockdowns. Our fourth quarter data showed economy was in contraction again. And even when you looked at some of the more positive signals, like a little pickup in borrowing and some other things, when you dug down, SMEs borrowed more, private firms borrowed more, but they were borrowing from shadow lenders. It was really a story in which everything was down and everything was about distress. So that's why there's so much hope looking forward into next year for better times.
So we were told from China expert after China expert that Xi did not care about the status of the economy. What he cared about was consolidating his power and control. Was that just a false narrative?
No, I think the narrative was right, but after a certain amount of pressure and also securing his third term, something gave. I mean, it is a very mysterious turn of events. It doesn't make a lot of sense. If they were planning for some turnabout after the Party Congress, then there would have been presumably more preparation, whether it was a vaccine rollout, whether it was targeting the elderly with the targeted vaccination campaign, therapeutics rollout, building up more ICU beds. So it doesn't look like they were preparing for the U-turn until the protests hit. China watchers are all over the place on this. Nobody can figure out what was in Xi's head. But what we do know is eventually the pressure got to him, and now he pulled back COVID-0 with very little preparation, and that's why we're seeing a COVID tidal wave right now.
Yeah, and Leland, with that in mind, the number of cases that we are getting here from overseas, from China specifically, what does that mean just in terms of how hard that's going to kind of derail this recovery? Because it seems like from what you're saying, a Q1 recovery seems out of the question right now. So how long until we start to see a more substantial recovery there?
I think we start looking at the potential for recovery in the second quarter. It really is amazing the degree to which COVID is spreading across China right now. I don't think anyone in their wildest dreams imagined, Xi's goal would be to lock down the country for almost 3 years and then suddenly let it rip and everybody gets COVID in a matter of 2 months. But that seems to be what's happening. What I think markets are jumping the gun on is that they're looking at subway indicators for Beijing and Shanghai. They're seeing peak COVID or approaching peak COVID in the next couple of weeks in a lot of big cities. And they're saying, look, this thing is over. It's not over. China's big. China has a lot of rural areas. It's going to take a lot more time to go through 1.4 billion people than it will the first 75 million, which is where it's at right now. So I think by the time we get closer to the second quarter, we'll be seeing a turn, but not quite yet.
Leland, they managed to do a decent job of keeping a lid on just how bad the property sector is. What can you tell us and what lies ahead?
Well, look, property is just about as bad as we've ever seen it. Everything was bad. Everything was down. There were a lot of stimulus announcements in December. And one thing that people make a big mistake, analysts love to look at stimulus announcements and immediately say, hey, there must be an economic activity immediately after. You just snap your fingers. That didn't happen. You've got a big load of stimulus that's been announced, some of which is being put into play. But, we have both the new fiscal stimulus index and a fiscal activity index. And we can see that there is a little bit of juice flowing on the fiscal stimulus side that's not hitting the activity yet. You're going to have to see the COVID spread months go past before you're going to see property really tick back. So I think people have gotten ahead of themselves on that as well. COVID is a dominant story right now. Hard to stimulate anything during a COVID tidal wave.
Well, Leland, given the deceleration that we certainly have seen in China, the weakness that remains when it comes to the economy, what does that mean on a global scale?
Well, it just means that there are a lot of people holding out that China is going to save the world in 2023. I do think that there will be a nice cyclical bounce back in 2023. Could be the second quarter, could be later. We'll see. We'll see how things happen. There might be, investment kicking back in, possibly consumption spending, maybe some stimulus on top. So you could see some very nice numbers off some terrible 22 numbers. But you got to remember that, China is not the growth engine of the world. Everyone thinks, second biggest economy in the world, it must be the one, contributing to global GDP. China is exporting to the world. China's consumption is extraordinarily low. So the idea that China is going to consume its way, spread demand out and bring the economy back if there's a global recession, that's not in the cards. But certainly a recovering China that's better than it has been in the last year will be a little bit of a positive signal.
Of course, Taiwan could be as big, if not bigger, question mark than COVID. Former Trump administration National Security Advisor H.R. McMaster shared his thoughts on what the U.S. can expect from China on Face the Nation Sunday. Listen.
I think we are underinvested in defense in the United States. China has become increasingly aggressive, not only from an economic and financial perspective and a wolf warrior diplomacy perspective, but physically with its military. And what's really disturbing is I think Xi Jinping is preparing the Chinese people for war.
Preparing the Chinese people for war. Do you buy that? And what would the implications be for the economy?
Well, again, you have to always talk about timelines. Is he preparing it for war on a 10-year timeline, or are we talking about 2023? So obviously, I don't think he's preparing for China for war in 2023. That doesn't mean there is not an important case for focusing on this issue. There is a major issue that could end up a war footing between the United States and China over Taiwan if the United States doesn't take this seriously, and China, reads into the situation that they can move without a proper counter reaction. So this is a very important issue. But again, you have to talk about timelines. Are we talking about 1 year? Are we talking about 3 years? Are we talking about 10 years? You're going to have a very different answer depending on what number you give me.
All right, Lula Miller, always great to have you on, CEO of China Beige Book. Thanks so much for taking the time, and Happy New Year.